guys, we'll get started with the next topic, chapter number 19, liquidation of companies. Liquidation of companies. Open that chapter in your booklet. Sir, liquidation means what? Converting into cash. Sir, liquidation of companies. Liquidation of companies means the company is shutting down. Company is coming to an end. Liquidation could happen voluntarily or forced. Meaning as per company order or court order also, your company can liquidate, or voluntarily also company can wind up or close down the business. Fine now. Whether it is voluntary or court order, our problems will not have any difference. Is it okay? Certain adjustments might have, we will see that as we go. Are we fine? So what is the problem when the company winds up, sir? Or what do we need to do when a company winds up? When a company shuts down, what are the things we need to do? All the assets we need to sell. When you sell the assets, you're going to receive money. That money you have to distribute it to various people. Yes, no? Bank people, creditors, your bills payable, your debenture holders, preferential shareholders, equity shareholders. Like this, many people are there. So whatever money you have received, you have to distribute now. Now the question will arise, who should get the money first? Yes or no? Everybody will say, I want the money first. Correct? And then there will be a ruckus. So there is a certain order of payment which we need to follow. Whenever a company liquidates, who should be paid first? It's there. All this as per Companies Act provision. Okay. So Companies Act has given who should get their money first. That we need to take care of. Got it? And if there's any deficit or if there is a surplus, in that case, what should we do for that deficit or surplus is another type of problem. We have about 3 to 4 types of problem here. That's it. When we cover those 3 to 4 types of problems, this chapter is more or less over. We'll go one by one. Fine. First, the issue is what, sir? First issue is with respect to the payment. No, I'm going to give you the order of payment. Just write down first. Order of payment. Give the heading as order, or normally whenever a company liquidates, who will be appointed, sir? One guy will appointed to oversee these affairs. That guy is known as liquidator. So liquidator will make the payment in the following order. Or I'll just write it as payment order. Payment order. First one. First, you will pay something known as overriding. First, you will pay something known as overriding preferential payments. Overriding preferential payments. Overriding preferential payments ka example I'm giving you. Those examples are workmen compensation or workmen dues, you can write. Workmen dues, or you can write workmen ka, or instead of dues, you can write workmen ka salary / wages. Okay. Their PF, ESI, gratuity, secured creditors, etc. These guys, we call it as overriding preferential payment, or these payments we call it as overriding preferential payments. First, we will make the payment to this particular set of guys. Okay. Generally, you don't see this particular thing in your problem. Okay. This particular thing, the overriding preferential payments. We have a separate problem on overriding preferential payments. There we'll be doing that. For the time being, you can ignore overriding now. Okay. So second, you will pay something known as legal charges or liquidation expense. Liquidation expense, or in bracket mein you can write legal charges. Legal charges. Then you will pay something known as the liquidator's remuneration. Liquidator's remuneration. Liquidator's remuneration. Then you will make the payment to debenture holders. Then you will make the payment to debenture holders. What and all will debenture holders get, sir? Debenture holders will get the debenture value as well as the interest. So two things debenture holder will get is the debentures or debenture value, plus what will they get? Plus the interest. Interest. Or you can write interest. You can split interest into two parts. Interest you will pay up to the date of winding up date or liquidating date, up to winding up date in case of insolvency, of company, and interest you will pay up to the payment date, of debenture holders, or I can write up to payment date in case of others, or in other cases, you're right, up to payment date in other cases. This is your debenture holders ka. Next, you write preferential creditors. Preferential creditors. Preferential creditors means employee salary or wages up to 4 months. Employee salary or wages up to 4 months. Then you can write PF, Provident Fund, comma, gratuity, comma, ESI, comma, pension, comma, you can write workman compensation. And also you can write tax to the government, or government taxes, or tax to the government. Tax which is payable to the government. That also we call it as a preferential creditors. Next, you make the payment to unsecured creditors. Unsecured creditors. After paying unsecured creditors, you will pay preference shareholders. Preference shareholders. What and all preference shareholders will expect, sir? One, they will expect their preference share capital and if any dividend arrears. So right here, preference share capital. One, you need to pay them preference share capital plus dividend arrears. Dividend arrears up to winding up date. Up to the winding up date. This is for preference shareholders. Lastly, after paying preference shareholders, if any money remains, you will give it off to whom? Equity shareholders. Equity shareholders. This is the order of payment. Always use this as a reference. Okay, now there is one side of problem where we have to follow this order. We'll come to that here. So far, good, huh? All right. Okay. First payment whom are we told? Overriding preferential creditors. Before you pay anybody, first you have to pay something known as overriding preferential payments. Those are nothing but what? Something which is payable to your workmen, whether it is salary or wages, whether you're paying on a month-on-month basis or a piecemeal basis, doesn't matter. If anything which belongs to workmen, we call it as overriding preferential payments. On salary, you pay PF, ESI, pension also, gratuity. That also becomes under overriding preferential creditors. Are we good? There is a separate problem for this. We will do this there. Will not go for the time being. Okay, this you will not see in today's session or maybe in tomorrow's session also. We will see this as a separate case study. Next, what are you going to pay, sir? Liquidation expense. Whenever you are liquidating, there will be some legal expenses. No. If there is any legal charges, that we call it as liquidation expense. Pay that first. And liquidation is undertaken by whom, sir? There is one person who oversees this process. That is known as liquidator. He'll do that free of cost or he will charge some money. That we call it as liquidator's remuneration. Pay that. Are we good? Then you will pay somebody known as debenture holders. Debenture holders will get what I said, debentures as well as interest. Interest you need to remember is in case the company is wound up, a company is insolvent, company became bankrupt, that's the reason they're winding up. Then interest you need to pay as per Companies Act up to the winding up date. Is it okay? Let's say the winding up date is 31st March 2021. Winding up date is this. Is it okay? On the day we wind up only can we make the payment, or there could be some delay, sir? There, when you wind up, then only you'll start selling the assets, realize the money, and then make the payment. Yes or no? You sold the asset. By the time you realize the money, there is some delay. Let's say money is available to you only on 30th September 2021. You got all the money. When you sold the assets, you realized on which date? 30th September. That means on which date can you make the payment, sir? 30th September. 30th September becomes your payment date. 31st March is your what? Winding up date or liquidation date. If company is insolvent, if it is bankrupt, because of that, if you are liquidating, means as per Companies Act, you need to pay interest on debentures only till 31st March. In case of other scenario, meaning if the company financial position is good and all, in those cases, you have to pay the interest up till 30th September. That is what I've written here. Interest you will pay up to the winding date in case of insolvency, and in all other cases, interest will be paid up to the payment date. Is this example clear for you? I know. Generally, it will be paid in all your problems. You'll pay the interest up till the payment date. Most problems this will be having, but so far they have not tested this aspect too much. Like it has been, the company has gone into bankrupt, hence liquidation has happened. That they have not adjusted. Maybe in your attempt, if institute decides to get creative, then you need to know. If this is the case, means you will pay interest only till what? 31st March. So watch out for that. So that's the reason I've given it here only. Fine now. But not popular question or not popular adjustment as such. So can I go for the next, sir? Then you'll pay somebody known as a preferential creditors. Preferential creditors means employee salary, wages up to which month? Up to how many months, sir? 4 months ka employee dues, we take it as preferential creditors along with gratuity, PF, pension, as well as the tax due to the government and all also be considered as a preferential creditors. Good enough so far? All right. Then you pay somebody known as unsecured creditors, or in reality, actually, first the preferential shareholders will be paid and then only debenture holders will be paid. Actually, is it okay? But our study material is following this order, hence I'm just following that only. Is it okay? But these two order might get changed. We'll see how it can get changed in terms of problems. Are we fine now? So 4 may become 5, 5 may become 4. That could get changed. We will see when we come to the problem as such. For the time being, I'll maintain this order. Fine, right? Okay, after paying preferential creditors, you pay unsecured creditors. Unsecured creditors means what? Your normal creditors like outstanding expense, your creditors, your bills payable, all these we call it as what? Unsecured creditors, meaning you have not given any specific guarantee to them. Is this okay? For creditors and all, do you give guarantee? You just enter into a contract and move on. Yes or no, sir? Yes or no, sir? Alright, so unsecured creditors you pay next. After paying unsecured creditors, all the outside liability holders are paid off already. Then you will start paying whom? The shareholders. Which shareholder will be paid first? Equity or preference? Preference shareholders will be paid. What and all preference shareholders will ask for? Their share of capital plus dividend in arrears. If dividend is in arrears, up to the winding up date, you pay that also. If dividend amount is already cleared, means you don't have to pay it. Check the problem and accordingly figure out whether the dividend is in arrears or not. Lastly, whatever money remains, you will pay it off to whom? Equity shareholders. So order of payment is clear. Don't worry, we'll apply this. In almost 5-6 problems we have. We have to apply this any which way. I thought I'll just discuss with you initially only so that it'll be clear. Are we good so far? Okay, sir. So we learned preferential creditors, all of you. Question number 1 is relating to that. We'll do off question number 1. Let's come to question number 1, sir. A company went into liquidation whose creditors are 36,000. Includes 6,000 account of wages. Stop there, sir. Wages means what, sir? It's a preferential creditors. It could be overriding preferential creditors also, but overriding, I told, don't interfere for the time being. We'll see it later. Okay. So how much this 36,000 creditors includes, sir? It includes 6,000 due to what? On account of wages. Wages means salary. For your production workers and all, you pay wages. For how many people, sir? For 15 men at 100 rupees per month for 4 months immediately before the winding up date. So that means what, sir? For 15 guys, you have not paid their wages for 100. Their wages per month is 100, not daily wages. This is old Zamana ka question. Okay. You are paying a wages of how much per month? 100. And how many months due is there, sir? 4 months. What is preferential creditors? You just now wrote a point. Preferential creditors includes what? Here only you wrote. Wages, employee salary, up to how many months you wrote? 4 months. Here, how much is due, sir? How many months is due? 4 months. Entire 4 months will be considered as what? Preferential creditors. Yes or no? All right. Read further. 9,000 being the salary of 5 employees at 300 rupees per month for 6 months. Underline that, 6 months. Salary is due for 5 men for 6 months. Entire 6 months, can I treat it as preferential creditors, sir, or only 4 months, sir? 4 months of this will be considered as a preferential creditors. Manageable. Okay. Next, rent of for a go down for the last 6 months we have not paid. How much is we have not paid? 3,000 per month or total 3,000? Rent for the last 6 months amounting to 3,000. That means the total rent for the 6 months is 3,000. Did I say the rent over there is a preferential creditors, or what did I say? Only dues to the employees, government dues, workman compensation. Only these are preferential creditors, I told. Have I mentioned anything else other than that? No. That means, is rent a preferential creditor? No. How about income tax, sir? They've said here, check. Income tax deducted out of salary of employee, 1,000 rupees. You don't pay full amount. I think I've already explained this. TDS concept, tax deducted at source. Explained or not explained? No, sir. Not explained. Or I explained for morning batch. Huh? Okay, no problem. If you pay, if you have to pay the salary to the employees, let's say, sorry, no, okay. Let us say you employed one person whose salary is 1 lakh rupees per month, sir. Is it okay? You on salary you have to pay tax to the government, yes or no? Correct? No. So what they are saying is, see, let's say this is Mr. X. His salary is 1 lakh rupees every month. He has joined, let's say, Wipro Limited. Fine now, sir. On whatever Mr. X earns, this is X ka income. On income, you have to pay income tax to the government. What if Mr. X does not pay the tax? What if Mr. X does not pay the tax? Because there are crores of individuals in our country, yes or no? What if Mr. X decides to default? It's a huge problem for the government, yes or no? So for this, to tackle this, government introduced one concept known as TDS, tax deducted at source. What the government is telling Wipro is, let's say tax we need to pay is 10%. There is a slab calculation, leave that for the time being. So directly we'll take it as flat rate tax is how much? 10%. This is not so, just for simplicity I'm assuming it. So 1 lakh at 10% is how much, sir? 10,000. That means how much tax Mr. X needs to pay to the government? 10,000. Are we okay? 10,000 every month. Fine now. What government will tell the Wipro is, how much is the salary of Mr. X? 1 lakh. Don't pay 1 lakh rupees to Mr. X. Pay him only 90,000. That 10,000 rupees is a tax he needs to pay to me. So pay that directly to the government or to me. So Wipro Limited, they will not pay 1 lakh rupees to Mr. X. They will pay only how much to Mr. X? 90,000. This 10,000 is Mr. X ka income tax, which the company will withhold and pay directly to the government. Is this okay? That way it is easy for the government to manage. Because there could be 10 crore people, sir. But is there 10 crore companies or only one company? See, Wipro has, let's say, 50,000 employees. 50,000 people. If these 50,000 people default means, it's very difficult for the government to reach out to all of them and say, give me tax, give me tax. It is difficult to follow up, yes or no? But with the help of TDS, government will not catch hold of 50,000 people. They directly catch hold of whom? One company, which is what? Wipro. If you catch hold of one company, entire 50,000 people will be automatically taken care of. Hence, this concept of TDS was introduced. Are we okay? It is basically employee ka tax, which employer is paying directly to the government. Did you get the meaning of it? Is it okay? Same example, I think I gave it for morning batch as such. Manageable. Do you know the concept of TDS? No. Tax faculty will explain you in detail as such. I just try to explain it in brief. Sir, here do we have tax deducted out of salary, sir? So this tax deducted out of salary is what? Company ka tax or employee ka personal tax? Employees ka personal tax, which company is deducting and paying it directly to the government. How much is that, sir? 1,000 rupees. This 1,000 rupees, does it belong to the company or it belongs to the government? Any dues to the government only, what do we call it as? Preferential creditors. Are we okay? So is this 1,000 rupees TDS, tax deducted at source, A preferential creditor? Yes. Got it. Then there is a director's fees. You need to pay the director 500 rupees. Have I told anywhere over there director's fees is a preferential creditor? No. In addition, it is estimated that the company would have to pay 5,000 as compensation to the employee for injuries suffered by him, which was a contingent liability not accepted by the company and not included in the said creditor's figure. Maybe it's a production site. Maybe we are a real estate company. In real estate company and all, if you are constructing high-rise building, there is a possibility that many employees or some employees may get injured. Correct? No, some may be permanently disabled also. So here they're saying one compensation we need to pay. How much is that? 5,000 rupees. Company has not yet paid because company is debating it. Company is telling it is not my fault. Okay. But still, how much is that compensation? 5,000. What did we say there in preferential creditors? Is workman compensation a preferential creditor? Have I declared that check? Is workman compensation a preferential creditors? Have I given as per Companies Act? Yes. So is this 5,000 also a preferential creditor? Very much yes. Manageable. So those are your preferential creditors. That's what they're asking you to find out. Find out the amount of preferential creditors. Can we fadafat write it off? Question number 1 ka solution. Preferential, or you can just give the heading as preferential creditors. Preferential creditors. First, what is the first preferential creditors we found out, sir? One is the wages, correct? Huh? So first one is wages. To how many people we need to pay wages, sir? 15 men. And what is the wages every month? 100 rupees per month. This could be 100 or 100 lakh, doesn't matter. There's no cap on the value. There is only cap on the number of months. How many months? 4 months. So 15 guys ka 100 rupees salary every month. For how many months is it due? 4 months. Is 4 months dues a preferential creditors? Very much yes. 15 men multiplied by 100 rupees salary every month. For how many months is it due? 4 months. So calculate this, how much it's going to be. 6,000 is the preferential creditors with respect to wages. Just wages we have, or we have salary also now? Salary also we have. How much is the salary for how many employees? 5 employees and salary is 300 per month. But here they have given it to be 6 months. Will we take 6 months as preferential creditors or only 4 months? So means you will write here 5 employees multiplied by salary per month, which is 300. Only you will multiply by 4 months. So balance 2 months ka salary will be treated as normal. Is it okay? Or you can treat it as overriding preferential creditor also. That is as per Companies Act they have given the stipulation. They have given a slab as such. They will have their own logic as such. Why to pay it? Salary are core person of your employees. No, they said probably at least 4 months of them to clear the dues first. Their viewpoint. It's like asking, why red light, stop, green light, go in traffic signal. Like that. When they say 4 months or when they say particular percentage, no, they'll not tell why they framed that. Obviously, there'll be a logic, but they'll not publish all that. They would have thought, maybe for in India, up to 4 months, beyond 4 months due, if you don't pay, no, it may be a little difficult for the Indian household to manage. Maybe that may be their ideology, keeping economies in mind. We don't. They've not published. But up to 4 months is a stipulation given by Companies Act, not us as such. Nothing accounting here. Companies Act. What about the rest? Rest you will treat it as unsecured creditors and go it as. Fine. So how much is this, sir? 500 into 5 into 300 into 4 will be how much? 6,000 again. Do we have any TDS, sir? TDS on salary, how much they have given, sir? How much is the TDS on salary they have told? 1,000 rupees. Is that a preferential creditor? Yes. Is rent a preferential creditor? No. Is the director's fees a preferential creditor? No. How about workman compensation of 5,000? Yes. Doesn't matter whether you have accepted it as a liability or you're treating it as contingent liability. That is irrelevant as per Companies Act. If there is any compensation, it becomes your preferential creditors portion. Got it? Whether you make provision for it or you make contingent liability, that is irrelevant. Is that okay? All right. Last portion is workman compensation. How much is that compensation? 5,000. Okay. That's all, yes. So add all this, sir. So what is the total value of preferential creditors? How much? 18,000. Oh, sure. Huh? Okay, 18,000. Total preferential creditors. Is this easy? 2 marks you may get these sort of questions. Again, this topic has a good range From 2 marks up till what? 10 to 12 marks. This chapter ka marks may vary. You have all sorts of questions. We'll see. So question number 1 done now. Anybody still copying or okay? Copying or done? Done. All right. Next, there's a small concept. We'll learn the concept, then immediately we'll apply in the question. Okay. So there is a term known as contributory, sir. Contributory means the guy who is to contribute to the company or pay to the company. There are 2 types of contributories. List A contributories, List B contributories. List A and List B. List A contributories are present members of the company. Present equity shareholders, whoever is owning that shares, equity shares of the company now, no, then we call it as List A contributories. Manageable. Basically, present members of the company, we call it as List A contributories. Easy. Whoever has the shares right now. Fine. So this is okay. There is also something known as List B contributory. List B contributory means those guys who have sold the shares 1 year before liquidation date. Suppose liquidation date is 31st March 2020-21. Can you calculate 1 year before this date? 1 year before this, if you go back, what will be the date, sir? 1st April 2020. Yes or no? Guys, yes or no? Correct? The guys who have sold the shares within this period, whichever shareholder has sold this company ka shares within this period, we call it as List B contributories. Did you get the meaning of it now? Yes or no, sir? Once more. List A means what? The guys who are presently holding the shares of the company. Present members of the company, we call it as List A. List B means past members, earlier members, your seniors. Your college, you had the junior senior concept. No, the seniors, we call it as what? List B contributories. Not your college means there will be many seniors. No. Here the cap is what? Those guys who have sold the shares within 1 year from the liquidation date. Here liquidation date, I've assumed it to be what? 31st March. From 31st March, go 1 year back. Take 1 year back. That will be what? 1st April 2020. No. Whichever person, whichever shareholder has sold the company ka shares in this period or in this 1 year, we call such guys as List B contributories. Is the meaning okay? Yes. Okay. Why do we have List B? Is suppose when company liquidates, it will sell all the assets. No. Suppose we need to pay a liability of 100 rupees, sir. This company, let's say this is X Limited, they have to pay a liability of how much? Total liability they need to pay 100 rupees. Outside liability we're talking about here. We're not even talking about shareholders. Leave that. Outside liability we need to pay how much? 100 rupees. Let's say this company started selling the assets. Assets realized only 80 rupees. We sold all the assets. How much did we realize? 80 rupees. This X Limited, no, they have a equity shares. Okay, equity shares ka face value is 10 rupees. Paid up value is only 8. Paid up value is only how much? 8 rupees. All the shareholders are paid to X Limited only 8 rupees. But the face value of the share is how much, sir? 10 rupees. Are we okay with this? Do we have any shortage, sir? Do we have any shortage here? How much shortage? 20 rupees. So far good? Okay. In case of shortage, what will the X Limited do? There is a shortage. So what will X Limited do? Let's say company has about 1000 shareholders or 1000 shares. What will the company do? What will the company do, sir? We'll approach the shareholder and tell, boss, the face value of the share is 10. You have paid me only how much? 8 rupees. When a company has limited liability or unlimited liability, sir? Company. In case of a company, the shareholders have limited liability. Limited to what extent? Limited to the face value of the share. Yes or no? What is the face value of the share? 10 rupees. How much have the shareholders paid? 8 rupees. That means 2 rupees they have not yet, company has not yet asked, hence they have not paid. Yes or no? This is not calls in arrears. Company has asked the shareholders to pay 8 rupees till now, and all the shareholders have paid how much? 8 rupees. That means how much yet to pay them? On these shares, how much they are yet to pay? 2 rupees. So company can approach them and ask this, Macha, give me money. Because I have a shortage. This is okay. Suppose these are present members. No, present members only we call it as what? List A. Even after collecting from List A, if there is still a shortage, or some of the List A members, if they don't pay, then Companies Act gives a provision that you can go to another category of shareholders known as list B and ask them to pay the money. Is it okay? Only under two circumstances you can approach list B. What is that? One, your existing assets are not sufficient to pay off your liability, meaning there is a shortage scenario. First, there is a shortage. Two, first you look to collect the shortage from whom first? The list A members. Even after list A members have paid the money, still if there is a shortage, or if list A members told I cannot pay, they said I am bankrupt, or they ran. Is it okay? If list A members, if you are not able to collect, then Companies Act gives you a leeway that this company can approach another class of shareholders known as list B and collect that shortage. Are we good? That's the reason we need to know list B, who is it? Question number 2 is based on list B. If you have understood the theory, we can apply how it works with numbers. Theory portion, is it fine now? Are we good? All right. Can I come to question number 2 then? Yes, sir. All right. Come to question number 2 then. Question number 2. Goner Limited. Nice name. Company is only gone. Goner Limited has gone into liquidation on which date, sir? 25th June. Underline that date. Goner Limited has gone into liquidation on 25th June. Certain creditors could not receive the payments out of realization of assets. Certain creditors could not receive payments out of realization of assets. That means, do we have enough assets or we have a shortage? We have a shortage. And out of the contribution from list A contributors. Read the whole sentence properly again. Certain creditors could not receive the payments out of realization of assets and out of contribution from list A contributories. So we have to utilize both. Assets also we sold, and from list A also we collected the money. Even after doing this, we have what? A shortage. So if in this case, if there is a shortage, then what is the resort or what is the option available with the company? Along with list A members, that is the present members, you can also approach the past members. That we call it as list B contributories. The following are the details of certain transfers which took place for the year ended 31st March 2013. They have given you certain shareholders. Who are the shareholders? PQRST. P was holding 4,000. Q ka holding is as much. They are telling each shareholder how many shares was he holding. Next, they have given what? Date of ceasing to be a member. When does a person, shareholder, cease to be a member, sir? When does he not become a member? Or when does he cease to become a member? When he sells the share. So indirectly, they're telling this is the date of sale of shares. Is this okay now? Instead of telling date of the sale of shares, they are telling date of ceasing to be the member. Are we good with this? Any confusion? Okay. So, on which date? Any doubt? Yeah, what is it? List. There's an option, sir. It's an option given that company. Ideally, it looks like yes, like that. But here, see, sir, simple thing, funda. When list B guys also is there. What is the face value of the shares? 10 rupees. List B means previous member. Yes or no? When previous member was a shareholder, what was the face value of the share? 10 rupees. What is the paid up value? Still 8. Sir, when he was a member, his liability was what? On one share, how much was his liability, sir? 10 rupees. Had he paid 10 rupees or had he paid only 8 rupees? Company would have already told him, boss, I've only asked 8 rupees till now. If I want, I will ask 2 rupees more from you. And you should be ready to pay. And what will that previous member would have told at that point of time? No problem. I know that my liability is up to face value. And the face value is only 10 rupees. I have paid you only 8. So that means I have a liability towards 2 rupees. I will pay you. Is it okay? Since they had already known this, now Companies Act is giving one leeway. Okay, approach them. That's the reason we are not taking. Go to last 50 years ka previous members, you collect the money. They've said a leeway. Leeway is only up to how many years? 1 year. Whoever has sold the shares within 1 year, approach only them. And collect only unpaid portion. Left, right, center you can't collect. You can ask how much ever you want. They will pay only how much? They've already paid 8 rupees per share. How much more they can pay? Maximum 2 more rupees on one share. This is the leeway given. Yes or no? Are we fine? It's not a loophole as such, sir. Okay. It's not a loophole. Yes, it's basically a what? We're saying we're just putting what? Outside liability holders ka interest a little ahead of the shareholders. Because even when the previous members were a shareholder, their liability on one share was 10 only. And they knew about it clearly. And they had paid only 8 rupees. Yes, no, that we are collecting from them. That's an option given as such under Companies Act. Not necessarily every time you have to go. Fine. If in case it is available, go ahead and do that. Yes, sir. So it's not a breach of contract. It is not anything. Some of you are saying it's a loophole, breach of contract. Nothing. No breach of contract. When you bought the shares, on one share, your liability is 10 rupees. You have to pay 10. And this guy has, previous members have only paid 8 rupees. So company has every right to collect 2 rupees from them. So absolutely not a loophole, breach, nothing. Fine. All right. If you don't like it, you can always become what? The chairperson on the MCA, Ministry of Corporate Affairs. Get high qualification, become MCA president or whatever is that, change the rule. Currently, this is the rule in Companies Act. This is not accounting standard. This is Companies Act ka rule. Fine. If you don't like it, get to the top, change the rule. So that your juniors don't have to study this. Fine. For now, you have to do it. Fine. Are we good with this so far? All right, sir. Come back here. Sir, peek out. Read the dates very carefully. When did P sell the shares, sir? 10th May. Or one moment, hang on. List B means every previous member will be considered as List B, or there is a cutoff, sir. What is the cutoff? From the liquidation date, 12 months you need to go backwards. Yes or no? Those guys who have sold the shares within 1 year from the liquidation date, those are only known as what? List B. What is the liquidation date here, sir? 25th June. From 25th June, go 1 year back. That will be what? 26th June 2012. 26th June 2012 to 25th June 2013. This constitutes your 1 year. Yes or no, sir? So whichever shareholder has sold the shares within this window or within this period, those guys are only be known as what? List B. Only those guys can be approached for collecting the payment. If you have sold the shares even 1 day before 26th June, they cannot be asked because they are not List B contributories as per Companies Act. Easy now. All right. Are we good with this so far? Good enough. Okay, check here, sir. This is the window. Check when did Mr. P, carefully check the screen. When did Mr. P sell the shares? When did P sell the shares? 10th May. 10th May falls within this window or before this window, sir? Window starts from 26th June. This guy is sold off in 10th May itself. That means before 1 month only of this date, he has sold off. Is P a List B contributory? P is not a List B contributory. That means company cannot approach him. Fine. Even if the company approaches, he has no obligation to pay at all because he is not a List B contributory. Is this okay? How about Q? When did Q sell, sir? 22nd July. Does 22nd July fall within this window? Yes. So is Q a List B contributory? Yes. How about R? He sold on September. Does September fall on the window? Does 15 September fall under this window, sir? Yes. That means is R a List B contributory? Yes. So put a tick mark against. S also is. T also is. So Q, R, S, T. These guys are what? List B contributories. Are we fine, sir? Next, they have given creditors remaining unpaid or outstanding balance of creditors. They have told. When P sold the shares, creditors balance was 9,000. When Q sold it, it was 12. Like this, they have given the balance. On the date of sale, creditors balance was so and so, so and so they have given. Come back here. All the shares are rupees 10 each. That means what is this 10, sir? Face value. 8 rupees is paid up. Face value is 10. Paid up value is how much? 8 rupees. So that means what, sir? In case of a company, shareholders' liability is limited to what extent? Limited to the extent of face value. Have all of these guys already paid 10 rupees or only 8 rupees have they paid up? Only 8 rupees. That means company, if it wants, it can ask another how much? 2 rupees from the shareholders. Manageable. Suppose, one question also has come. Suppose paid up value is already 10. Face value is 10. Paid up value is not 8. Suppose if paid up value is also 10. Then their liability is 10. They've already paid 10. Can you ask even a single paisa extra from them? You can ask, but will they pay? They will tell you what, tata much and go on. Yes or no? In that case, you can't collect. Are we good with this so far? Yes, everyone is clear now? So far good? So, okay. Check, sir. Show the amount to be realized from the persons listed above. How much money can you collect from these persons? They are asking. So, can you collect even a single paisa from Mr. P? No. Why? Because P is not a List B contributory. From others, we can collect. How much? We will see. I'll put up the solution. Can I start now? Okay. Question number 2. So, you'll give the heading as contribution from list B. Under that first pointer, you write previous members or past members of the company. Past members of the company are known as, or you can write past members of the company who have sold their shares. Who have sold their shares. Within what date, sir? Who have sold their shares within 12 months from the liquidation date. Within 12 months from the liquidation date are known as list B contributories. That is your first point. In the present case, or here you can just directly write liquidation date is what here? Liquidation date is given to be what in this problem, sir? Liquidation date is 25th June 2013. Yes or no? Everybody okay now? Alright. So that means 12 months preceding this date is what, sir? 12 months preceding 12 months preceding date is equal to what? Is equal to 26th June 2012. Yes or no? Fine. And then you'll write, when did Mr. P sell the shares? Mr. P has sold his shares. On which date has he sold, sir? On 10th May 2012. That means he has sold the shares before 26th June only. That means is this guy a list B contributory? Therefore, Mr. P is not a list B contributory. You need to give this disclosure, okay? This will carry maybe 1 mark. That Mr. P is not a list B contributory. Then you can give the heading as maybe point number 3, list B contributions. List B contributions. One moment. You need to have, first is the date column, creditors, incremental creditors, the ratio. You need to have 8 columns. Make 8 columns. Okay, list B contributions. Under that, make 8 columns. Small ones are okay. First is date of sale. Next is creditors balance. Then you have something known as incremental creditors. Then you have another column known as ratio. Date of sale, creditors balance, incremental creditors, ratio. And then you have who are list B contributories? QRST. QRST. Like have these many columns in your notebooks. Somebody is saying, how will they pay, sir? The company itself is not in existence. Just because you liquidated, just because you passed an order for liquidation, today only you can't shut down. Liquidation is also a long process. You just check if your articleship going students, check if your principal has done any liquidation assignments. Sometimes it takes 2 to 3 years for liquidation to happen. It's not a small affair. Okay, it may take a lot of time. Is it okay? So company will still be there. Operation may not be there, but still company will exist, so you can pay the company. So payment and all, don't worry. Okay, company will aramse be able to collect it. Okay. Yes, I think I've answered most of the doubts. So can I go back now and solve this? First, P is not a list B contributory. Leave him out. You start from Q. Q ka date of sale is which date, sir? 22nd July 2012. I'm just checking the question, okay? On 22nd July 2012, so what was the balance of creditors they've told, sir? On 22nd July 2012, how much was the balance of creditors? For one thing, no, pay proper attention. For one, if you understand, for two components, rest everything is just calculation. Okay? If you want, you can put copying on hold, just observe first. Or understanding means copy, no problem with us. So on 22nd July, creditors ka balance was how much? 12,000. In the incremental column also, first thing you write that to me. Sir, Q, how many shares is Q holding, sir? Can you tell me how many shares is Q holding? Q is holding 3,000 shares. Okay. R is holding how many shares? 2,400 shares. Okay. S, 1,600 shares. And T is holding how many shares? 1,000 shares. Alright. When did Q cease to be the member? 22nd July. Is it chronological? Is this date in serial order? Check. Okay, first Q sold the shares on 22nd July. After that, 15 September, R sold his shares. After that, S sold his shares on 14th December. After that, T sold his shares on 9th March 2013. That means these dates are chronological. Yes or no? Correct, no, sir? That means on 22nd July 2012, can I say all of these guys were members? On 22nd July 2012, that particular day, on the sale date, all of them were members. Yes or no? So, how much is the creditor balance we have, sir? 12,000. Will it be shared by one person or all the shareholders? All the shareholders in their shareholding ratio. All of them will contribute towards this liability in what? Shareholding ratio. Can you tell me the shareholding ratio of this? It will be what? I'll not simplify it. I'll write it as 30. 3,000 if I have to bring it down. Can I write it as 30? 30 is to 24 is to 16 is to 10. You can bring it down or I'll keep it as it is. Are we fine now? So this 12,000 which is a creditor liability, it will be shared by all the guys in this ratio. Can you tell me what is Q ka portion? For the time being, just follow what I'm saying. After next point, if you have any doubt, you can ask. First, follow what I'm doing. This is an important question. So 12,000 you distribute in this ratio, sir. Q ka share will be how much? 12,000 into 30 divided by what, sir? 30, 54. So it will be 70, 80. Yeah? So 12,000 into 30 divided by 80. How much it will be? 4,500. Similarly, R ka share will be what? 12,000 into 24 divided by 80. How much is this? 3,600. And S ka? 2,400. And T ka? 1,500. So far, okay now? Everybody okay with this? Can I go on with the next one, sir? Are we good with this so far? Alright. On this particular day, Q sold his shares. On that particular day, on the day Q sold, value of the creditor was how much? 12,000. Hence, he has to contribute. All of them have to contribute this 12,000 in the ratio of the shares held by them. So you told paid up value and all. Hang on. First, we'll do this calculation. Then we'll see the paid up value. This question is not complete yet. Listen to this. Okay. After 22nd July, who sold, sir? R sold. On which date? 15th September 2012. Correct, no? On 15th September, R sold. Now check what is the creditor ka balance. Creditors ka balance has become 13,500. Yes or no, sir? Till 22nd July, what was creditor ka balance? 12,000. From 22nd July to 15th September, it has become 13,500. Means has it increased? That only I'm calling it as incremental creditor. From 12, it has become 13,500. What is the increase, sir? 1,500. So this 1,500 the shareholders have to pay now. Why? Up to 12,000 anyway already contribution received, no? Again, can you tell all the shareholders pay 13,500 again? What are they mad? Up to 12,000 anyway they've contributed. How much more has it increased by? 1,500. This 1,500 you need to collect from the shareholders. Manageable arm. Meaning 12,000 you would have already collected. Now if you collect 1,500 more from the shareholders, how much money you would have got? 13,500. How much you need to pay to the creditors? 13,500. Like that. Got it? Yes or no? Okay, pay attention to this. Don't be in a josh. Hang on. This 1,500 will be shared. Only carefully listen to this. Very important. You can stop writing and write it later. It's okay. This 1500 will only be shared by R, S and T in the ratio of 24:16:10. Q will not even contribute single rupees towards his liability. Why? Sir, Q sold the shares on 22nd July. Yes or no? On 22nd July, what was the value of creditor? 12,000. He'll say, whatever on the day I sold, how much ever was the liability balance, towards that I will contribute. After that liability has increased means he will say, that is your headache. Why did you do business? You should have shut down on that day only. Correct? No, that fund it is built in. Or if you wanted a simplified example, some of your BCom cleared students graduated. Some of you have cleared your BCom graduation. Yes or no, sir? Which college? Which college you are doing, sir? Who has completed here already? Any of you done? Or which college, sir? He's saying I've done graduation from the Christ. Oh, somebody saying Christ. Okay, we'll take RV, no problem. RV college is graduated. Yes, sir. How long ago you graduated, sir? 1 year over, let's say. Okay, 1 year back he has completed graduation. Now suddenly RV college, no, they give him a call and said, hey, nice to see you. All right, we have increased our fees retrospectively. When you studied, the fees was 40,000 rupees per year. Now we have retrospectively increased the fees to 50,000 rupees. Boss, you have paid us 40,000. We gave the degree also. Now fees has increased from 40 to 50,000. Kindly pay 10,000. What do you think Mr. Sir will do here? He'll say wrong number and cut the call. Yes or no? Will he pay 10,000? No. That is what I saying. No scene. Same thing Q also will do here. When did Q sell the shares, sir? 22nd July. On that day, what was creditor's balance? 12,000. Once he has sold the shares, if any liability increases, he will not pay even contribute 1% of that. Because he'll only contribute towards that liability which was existing on the date of sale. Once he has sold, done and dusted. Out of sight, out of mind. Are we okay now? That kind of a concept here. Manageable. That is the reason Q will not contribute. Who are the shareholders on 15 September, sir? Who are still the shareholders on 15 September? R, S and T. So only R, S and T will contribute according to their shareholding percentage. What is their shareholding ratio? 24:16:10. Did you get the logic of this? Everybody, this all is the funda. If you got this, next everything is just calculations. Clear, everybody? Understood. Online also no worries, huh? Christ College, Christ College, Athira, okay, He's saying, I already told, no scene, I will not pay at all. Okay, so 1,500 you distribute in this ratio, sir. How much it will be? 1,500 into 24 divided by 50, So how much is this now? 720 is Q ka share. R ka? 480 is... Oh, sorry, my bad. I told properly, but I wrote in wrong column, no? Purposely I did that. Little build up, Okay, 1,500 into 24 divided by 50. How much is that? 720 for R. Q will not contribute even a single rupee. Fine, S will be 1,500 into how much is that? 16 by 50. How much is S ka share? 480. T ka? 1,500 into 10 divided by 50, which will be 300. If you add all of this, you're going to get 1,500. Manageable, Okay, 1 minute, hang on. Sir, on 15th September, who sold the shares? R. Yes or no? After this, if any liability increases, will R pay even a single rupees towards that, or he will say, I am not responsible? He will say, I am not responsible. That means next, who will share the liability? Only S and T, like that. That's how it goes. What is the next date of sale, sir? 14th December 2012. Check on 14th December, what was creditors ka balance, sir? 14,000 is creditors ka balance. Till 15th September, how much was creditors ka balance? 13,500. From 13,500, it has become 14,000, means it has increased by how much? 500. If you want, you can write in bracket how we got this. Later on, you may wonder how we got 500. And 500, how did you get? 14,000 minus 13,500. And this 1,500, how did you get? 13,500 minus 12,000. Manageable, Okay, what is the ratio under which, or who and all will share this 500 rupees ka liability, sir? Q and R are already gone now. Only S and T will share it. And what is their ratio, sir? 16:10. So the ratio column, you'll write 16:10. Q column, nothing. R column, nothing. S column, how much, sir? 308. And T column? 192. This is for your, matlab, this calculation is over, huh? Can I go for the last one? What is the last one? Which day was the sale happened? Sale happened on 9th March 2000. 9th March 2013. On 9th March, what was Creditas ka balance? They have told, sir. 14,200. From 14,000, it has become 14,200. So how much is the increase? 200. On 9th March, Papa, only one guy is the shareholder. Who is that? QRS. All of them have gone. That means only one guy will bear this liability, which is Mr. T. So that means ratio column will require, or just I'll write T. In fact, ratio is not even required. You can write blank also. Yes or no? So only one guy will share this. That is Mr. T of worth how much, sir? 200 rupees. Easy. Question is not over. Hang on. So far, everybody calculation okay, no? Can you give me one total column, sir? I don't need all this total. Give me only for Q, R, S and T. For Q, I will use Vedic maths. It is 4,500. For R, that also use Vedic maths. Okay, 4320 na. Alright, next one. 2,700, 3180 or 3188. 3188. Okay, last one is how much? 2,192. Are we good with this so far? Yes, sir, or no, sir? I'll write this as column number A. This is your total. Are we fine, sir? Okay. Sir, in case of a company, there is simple funda. You can ask the shareholders how much ever you want, but shareholder has a limit towards his liability. What is that limit, sir? All these shares are, face value is how much? 10 rupees. How much was already paid up? 8 rupees. That means the maximum you can ask on one share is how much, sir? 2 rupees. Fair enough. So the maximum contribution is 2 rupees. So that means next line may we write point number B, maximum contribution. Maximum contribution. How much is that maximum contribution is? Rupees 2 per share. How did we get 2 per share? Face value is 10 rupees. Paid up value is 8. So the maximum each shareholder can contribute is only 2. 1 minute. Line odiyana. That is a mystery. You'll never know. Okay. Alright. So on one share, maximum contribution is 2 per share. Q is holding how many shares, sir? 3,000 shares. On one share, maximum liability is 2. Q is holding 3,000 shares. So what is Q ka maximum contribution? 3,000 into 2, which is 6,000 rupees. Easy. Similarly, R is holding how many shares, sir? 2,400 shares. That is, what is his maximum liability then? 2,400 into 2, which is 4,800. S is holding how many shares? 1,600 shares. On one share, the liability, maximum liability is 2 rupees. On 1,600, it will be 3,200. Lastly, for T, T is holding 1,000 shares. So that means 1,000 into 2, which is 2,000 rupees is his maximum contribution. So the shareholders, look at the final conclusion. Have you updated? Check. You have asked here to Mr. Q. How much are you asking Q to contribute, sir? 4,500. Up to how much value can he maximum contribute? 6,000. Should you have to pay 6,000? It's not chance pay dance scenario. How much you require? 4,500. How much maximum he can contribute? 6,000. So contribution from list A, list B contributories will be 4,500 or 6,000, whichever is lower. Whatever is required or maximum contribution, whichever is on the lower side. Manageable. So that means you will say here point number C. List B contributions. List B contributions is what, sir? List B contribution is lower of A and B. Lower of A and B. For Q, you check. A is 4,500, or maybe if you want, I can just draw one line so that you'll know the distinction. For Mr. Q, required is 4,500. Maximum you can contribute is 6,000. So which is lower, sir? 4,500. So total contribution you can receive from Q is 4,500 or 4,500. How about R? Required is 4,320. Maximum you can contribute is 4,800. Which is lower? 4,320. So you'll write 4,320 here. For S, he can required number you're asking is 3,188. He can contribute maximum how much? 3,200. That means which is lower? 3,188. That much he will contribute. Check for Mr. T. How much are you asking him to pay? 2,192. But maximum he can contribute is only 2,000. That means which is lower, sir? 2,000. So that means you can only get 2,000 from Mr. T. Okay, so if you want at the end, you can have one more column like total list B contributions. Total list B contribution is how much? Total list B contribution. If you add all this, it is nothing but 4,500 plus 4,320 plus 3,188 plus 2,000. Add all that. How much you getting the maximum contribution to be? 14,008. That is your answer. This is how list B contributions work. And there are two conditions. Don't forget that. When can you approach list B? One, there must be a shortage, meaning assets are not sufficient to pay off liabilities. And first, always try to recover the money from the present members, meaning list A. If list A is not able to contribute, then only you will touch upon list B. And list B, there is a cutoff window. That is what? 12 months from the winding up date. Only those guys who have sold the shares within that date only can contribute. These are the provisions. Somebody is asking, sir, what on 15th September paid up value is rupees 7. Then they called up 1 more rupees and it became 8. So when they sold their shares, check. When they sold their shares, what is the paid up value? You're saying it is 7. That means maximum contribution will be 3 per share. Like that. On the date of sale, check. How much was the paid up value? Compare it with the face value. The difference the company can ask. Fine now. Such question is not there. Let's see if Institute decides to get creative there. Fine. Actually, these are Companies Act provisions. Frankly speaking, this should be kept in law paper only. It should not come here and ideally. But it's okay. It is there. We have to do it. So that's about it. Now, anything you want me to zoom in, or done now? Copying also done now. Somebody is saying, what if list B contributors have already paid full face value? I think I already explained that. If they've already paid 10 rupees, then can you ask even a single paisa extra from them? No. So that I think I already explained, sir. Okay. Somebody is saying, I need a minute. Okay, no problem. Others who don't need a minute can check the next question. No, sir. We will do a better thing. We will chat with our neighbor. We will chat about you. Dabba nan maga anta. ಏನೇನೋ ಹೇಳ್ಕೊಡ್ತಾನೆ. ಏನೇನೋ ಹೇಳ್ಕೊಡ್ತಾ ಇಲ್ಲಪ್ಪ. ಎನ್ನೇ ಇರಕೋ ಅದ ಸೊಲ್ಲಿ ಕೊಡ್ತಿರ್ಕೆ. ಸರಿಯಾ? I think I can move on now. All right. Come back. What is there? 2 over. Next to what? Energy. I think okay. This is easy. Let's do offset. Question number 3. You remember I gave you order of payment. That order of payment will get tested here. Like this, we have at least 5 to 6 questions. Question number 3 onwards, we have one type of questions. Is it okay? We will keep on doing that. One extra adjustment will keep coming in. So let's see. And these are generally the questions which get asked in the examination for about 8 to around 8 marks, somewhere in that range. So let's go through these questions. Enough Limited went for voluntary liquidation on 31st March. I told you liquidation could be voluntarily or court induced. Whatever. It doesn't matter for our accounting as such. Except maybe interest on debentures portion. Leave that. They went into voluntary liquidation on 31st March. The company's articles provided that on liquidation, out of the surplus assets remaining after the payment of liquidation cost and outside liability, it shall be first applied towards arrears of preference dividend, secondly to preference shareholders with a premium. Oh, okay. They said too much, but this word is important for us. Underline this. Secondly, to preference shareholders with a premium thereon, how much, sir? 10 per share. That means what are they telling? They gave too much goalie, but in between one important fitting they brought in, which is what? Preference shareholders. No, you are not paying the preference share capital at face value. You are giving them extra. How much extra are you giving, sir? 10 rupees per share you are giving them extra. That is what we call it as premium. Okay. So that is one funda. And the residue, whatever remains, will be paid to equity shareholders. Don't we know this? First you will pay to outsiders, then you will pay to preference shareholders, lastly you will pay to equity shareholders. That is what they are telling out of all this sentence. Out of this sentence, only thing that is important to us is preference shareholders have been paid not the face value of their capital, they have been paid a little extra. Fine, premium basically. That is a takeaway. On balance sheet on 31st March. In fact, liquidation date is also important for us. Let's underline that, sir. Liquidation date is what? 31st March. And they've given the balance sheet also on 31st March only. Let's underline. Dates are important, sir. Always keep in mind the dates. Okay, sir. We have 1 lakh equity shares of 10 each. So equity share capital is 10 lakh. We have 10% preference share capital of 100 each worth 12 lakh. But are we paying 100 back to the shareholders or are we giving 110 now? 100 plus 10 rupees premium. So that means on one preference shares we are giving 110. Then we have securities premium. Okay. Then we have debentures, interest on debentures. Underline this, interest on debentures. Then we have bank overdraft and creditors. Have they told bank overdraft is secured against that asset, this asset, anything like that? They mentioned in bracket. If they don't mention anything, bank overdraft, we take it as unsecured. If it is secured, clearly they will only tell. Security means surety. They would only told, we took the bank loan by hypothecating building or by hypothecating or by pledging machinery. Like this, they will clearly mention. If it is missing, always take it as unsecured loans. Fine now. Next, sundry creditors they have given, all that is okay. Then they have given various assets and P&L has a debit balance. So this is probably a loss-making company. That's the reason maybe they have gone in for the voluntary liquidation. Let's see. Next, preference dividend is in arrears for how many years? 2 years you have not paid preference dividend. That means preference shareholders will ask what and all. Preference share capital plus 2 years ka dividend. That is their entitlement which they'll collect because company is shutting down. Yes, no? Next, liquidator realize the assets as follows. You are liquidating means obviously you will sell the assets. Various assets you have sold at this particular value. All assets you have sold at that particular value. We'll figure out that a little later. Creditors were paid less discount of 5%. There should be a comma or a full stop there. Creditors ka value is how much, sir? 2 lakh, 30,000 as per balance sheet. But are you paying 2.3 lakh or you got 5% discount? So you paid them less money, as simple as that. Yes, no, you paid 95%, can I tell? 5% is discount, so the payment percentage is only 95. Debentures with accrued interest up to 30th June. Underline that, sir. Debentures with accrued interest up to 30th June. So your balance sheet ka date was what? 31st March. Here they're bringing in one date. What is that one date they're bringing? 30th June. Let's read this line. Debentures with accrued interest up to 30th June. That is 3 months after the balance sheet date was paid. So debenture holders, you are not paying on 31st March. You are paying them on 30th June. Up to 30th March, no, 31st March, interest has already been accounted as outstanding interest. Yes or no? Check in balance sheet, you are able to see interest means this is nothing but what? Outstanding interest. No? Guys, yes or no? Yes, up to 31st March, interest is already accounted. But are you paying the debenture holders on 31st March or 30th June? 30th June. That means, is there any delay? Yes, up to 31st March, you have accounted the interest. How many months more you need to account? April, May, June. So that means 3 more months ka interest they're asking. In fact, we have also written also. Only if company becomes insolvent, then interest you will pay up to liquidation date. In all other cases, you will pay the interest up to the payment date. I gave you an example also. Yes, and I told you, generally in most of the cases, we'll pay up to the payment date. Because they will not say insolvent. Have they anywhere used the term insolvency, bankruptcy anywhere here? Check. They just told voluntary liquidation. Just because they did voluntary liquidation doesn't mean they become insolvent. Not necessary. Are we fine? If it is insolvency or bankrupt, clearly they will only say company has filed for bankruptcy. In that case, you will calculate the interest only till 31st March. In fact, here much more clarity they have only given. Accrued interest up to 30th June was paid. They are only telling extra 3 months interest is paid. So question can't get simpler than this. Yes, sir. Can I move forward or nothing? No, easy only. Liquidator's remuneration. Obviously, liquidator will not do this free of cost. He's saying, I want remuneration of 2% on the assets realized. In the previous table, what are they given, sir? Assets realized. Calculate the total of that. Of that total, 2% you calculate. That will be liquidator ka remuneration. Ashle. Cost of liquidation, which we call it as legal expense or liquidation expense. How much is that? 7640. That also they've given. You need to prepare something known as liquidator's statement of account. One simple account liquidator needs to prepare. That is liquidator statement of account. Can I start with that now? Question number what, sir? 3. So directly give the heading as liquidator's statement of account. Liquidator's statement of account. Sir, what does liquidator do? He sells the assets and he makes the payment. That means, can I say he's only interested in cash coming in, cash going out? When he sells the asset, he will give. When I say cash, I mean both. Cash in hand as well as check receipts. So he is interested in what? Money coming in and money going out. So liquidator statement of account is nothing but your cash account. Is nothing but what? Cash account. So in cash account, what do you do? All the receipts you will show it on the debit side. All the payments you show it on the credit side. That's how is the format for liquidator statement of account also. So basically, you will write receipts. You will have to make 4 columns. Receipts amount, payment amount. Ashte. Same like cash account. No change. Receipts amount, payments amount. Make those 2 columns. Or rather 4 columns you make. Okay, first, have you made those 4 columns? First thing is balancer. To cash in hand or check in hand. Check. Does the company have any balance? Bank balance or cash balance? Do we have a check? Always make this checkpoint. Check on the asset side of balance sheet, sir. Is it there? Some problems they will give, some problems they may not give. So always check this. Josh may we generally forget this. Hence I'm writing that as a first thing. Is it there or missing? In this problem it is not there. So I'm going to write it as 0. First is that. Cash balance or bank balance. Whatever. Write that. Next, sir. What and all is a receipt for a liquidator? Can you tell? What way he gets the receipt? He'll sell the assets. Have they given the asset realized ka value? Check the second table is giving you various assets realized. So assets, if liquidator realizes, means it's a receipt for him or it's a payment for him. It's a receipt. So on the receipt side, you write to assets realized. To assets realized. What is the first asset that a liquidator realized, sir? Check your second table. I'm copying all the data from this particular table. Okay. Can you help me with this data? Or maybe 1 second. Which question is this? Third question. Okay. First asset he realized this. Freehold property now. Freehold property. How much is the value of freehold property he sold it for, sir? 14,25,000. But is the book value also 14,25,000? No, book value is 1185. Are we interested in book value or realizable value? So don't we prepare realization account? Who will prepare realization account? Accountant. Is liquidator accountant? Can you tell him? Martha idunu madbidi. Can you tell him? You do our accounts also. Can you pass on that? No. We are not closing the books of this company. That is accountant's job. What is liquidator ka job? Receiving the money, paying the money. So don't say realization, no book value, blah, blah. Liquidator is only interested in money coming in and money going out. So how much money came in? On freehold property, 14,25,000. Next to what came in, sir? He sold a plant. For how much value? 5 lakh? 5,05,000. Next. Motor vehicle. How much motor vehicle? I'm writing all this in inner column. I will add all of this and push the total assets realized to the outer column. So 118 is your motor vehicle. After motor vehicle, what did he realize, sir? Stock in trade. Stock in trade ka realizable value is what? 3 lakh. Next is sundry debtors. Okay. Sundry debtors. How much? 1,20,000. Any other asset realized or that's about it? So add all of this. 24 lakh. 68,000 is the value of the assets realized by the liquidator. Manageable. This is your receipt. Now check the question, sir. All the receipt side data we have covered. So now on the payments, I gave you the order of payment already. First is overriding preferential creditor. Have they mentioned any term about overriding preferential creditor? It will not be also. See, leave that. Next is what? Next, I give you order of payment is what? Legal expense. Legal expense is your liquidation expense. Do we have liquidation expense in this problem? Check. How much is that? 7640. First, you'll use the money to pay liquidation expense. Okay, now liquidation expense you are paying, liquidator is paying or getting? Paying. That means it's a payment, no? On the payment side, you will write by liquidation expense. By liquidation expense. And that amount happens to be 7640. Manageable. Next, after liquidation expense, I've given the order. What is the next order, sir? Liquidator ka remuneration. So that means you will write here by liquidator's remuneration. Does liquidator get any remuneration? They have told. Oh, yes, liquidator's remuneration is 2% of the assets realized. How much is the asset realized, sir? Total 24 lakh 68,000. Suppose bank balance was 1 lakh. Suppose bank balance was 1 lakh. For remuneration purpose, you would have considered 24 lakh 68,000 or 24 lakh 68,000 plus 1 lakh. 24 lakh 68,000 only. Bank is already realized. What can you more realize out of it? So bank you will not consider for your remuneration. Manageable even if they have given. So remuneration will still be how much? Remuneration is 2%, no? 2% on assets realized. Asset realized is 24 lakh 68,000. So the value will be 49,360. Okay. Next you will pay to whom I have told, sir? Debenture holders. So you will write by debenture holders. What and all you need to pay to the debenture holders? One, you need to pay debentures. What sort of debentures are these? 5% debentures. Or you can just write debentures or you can write 5% debentures. Doesn't matter. 5% debentures, how much you need to pay them, sir? 2 lakh or 5 lakh? I saw 5 lakh or 2. Oh, okay. 1 minute. My bad. Probably I need a break. Debentures ka value is 2 lakh. That's all you need to pay debenture holders or interest also now? Interest. Check the balance sheet. Have they already given any interest on debentures? Yes. How much? 5,000. So that you need to pay off. Interest on debentures already given in the balance sheet. How much is that? 5,000 rupees. Sir, you prepared a balance sheet. This balance sheet ka date was what? 31st March. But did you make the payment to debenture holders on 31st March or 30th June? That means what will they say? Give me April, May and June ka interest also. Yes, no? That means here what will you write again? Interest for 3 months. From what to what? From April to June. So can we calculate this interest? Here only we can show. Interest is always calculated on what? The face value of the debenture, which is 2 lakh. Interest rate is 5%. And the number of months is 3 months. So do that calculation. 2 lakh into 5% into 3 by 12. 2,500. That means totally how much you need to pay to the debenture holder, sir. Add all of this. You're going to get what? 2,07,500. That is the payment you need to make to the debenture holders, which I'm pushing into the outer column. Easy. All right. Have they given any preferential creditors, sir? Have they given preferential creditors? Check the question. Is there any wages or tax to the government? Any TDS, workmen dues? Nothing. So preferential creditors not there. So you can leave it. After preferential creditors, whom will you pay to? Unsecured creditors is there, no? Unsecured creditors is there. What are the 2 unsecured creditors you have, sir? Debenture holders you paid off. 2 more guys are there in the pipeline, no? Bank overdraft and creditors. Okay, first we'll write bank OD. Bank overdraft. Did we get any discount on bank overdraft, sir, or they didn't mention anything? If they don't mention anything, we have to pay the balance sheet value, which is 1,16,000, the full value, correct. This is bank overdraft. Next, unsecured creditors is your normal creditors. The balance sheet value of creditors is 2,30,000. Did you pay 230 to the creditors or you got some discount? You got 5% discount. That means can I write creditors in bracket? I can write 2,30,000 minus 5%. Can I write now? So how much will be that? 2,18,500. Or you can write 2,30,000 into 95%, whatever you are comfortable in calculating. So add those two, sir. How much it's going to be? These two conditions will be 3,34,500. That is your unsecured creditors. Once you pay unsecured creditors, all your outside liability holders have been paid off. Then whom will you make the payment to? Preference shareholders. And lastly, you will make the payment to equity shareholders. So we'll write by preference shareholders. By preference shareholders. What and all you need to pay to the preference shareholders? One, you need to pay preference share capital. That is 10% preference share capital worth 12 lakhs. So 10% preference share capital worth 10 lakhs. That's all, or we had some dividend arrears also. We have dividend 12 lakhs. Huh? Okay. So this is not 10. This is 12 lakhs. Do we have any dividend arrears? Yes, they gave you in the question. Preference dividend is in arrears for about 2 years. So can we calculate that? All right. Preference share capital is 12 lakhs. Preference dividend rate is 10%. If you do into 10%, you're going to get 1 year dividend. Here, how many years was the dividend in arrears for? 2 years. So if you multiply, it is 2,40,000. I mean, sir, how much you need to pay totally to preference shareholders, sir? Oh, okay, perfect, correct. See, one more mistake. What is that mistake? In fact, we'll write off here. This is not that. Are you paying 12 lakh to the preference shareholders, sir? We read the line. First line only they gave. Yes, no. You are paying preference shareholders a premium of 10 per share. Check. What is your preference share capital, sir? 12 lakh. Each ka face value is how much? 100. That means how many preference shares you have? 12,000. Yes or no? 12,000 preference shares you have. Each ka face value is 100. But are we paying 100 or 110? So that means here you can write 12,000 into, or maybe you can write like this, 12 lakh divided by 12 lakh is your preference share capital divided by 100. That will give you a number of preference shares multiplied by the 110, the value. How much will be that? 13 lakh 20,000. Okay, thank you for reminding. All right, so this is okay now, preference share capital. Now, that's it, or dividend arrears also now. We have a dividend arrears also. But dividend is always calculated on the face value only. So which is 12 lakh, and these are 10% preference shares and 2 years dividend arrears. So that will be 2,40,000 only. I mean, the total payment you need to make to preference shareholders 15,60,000. Easy. After doing this, if any money still remains, it will be given to whom? Equity shareholders. That means you will write here by equity shareholders. By equity shareholders. Check, sir, how much money is available with you. Give the total. This side total is 24,68,000. 24,68,000 minus all the payments you subtract. Do we have any balance? You just check. This is basically arrived as balancing figure. Balancing figure, they are saying it is 3,09,000. But sir, equity shareholders ka share capital is 10 lakh. Yes, equity shareholders are risk bearers. If they have surplus, they will take the surplus. If they have deficit, they'll take the deficit. That's all. How much ever money is remaining, they will take that. That could be shortage or that could be excess. Doesn't matter. We may add in below that dividend. I didn't understand your question. Can you rephrase? In the meantime, anybody has to copy means you can copy. It got over soon only now. That means one more question now. Okay, let's do a thing. Let's take a break and then we shall resume. Thank you.